Thanks for joining us. I'm Marlon Bowling with you, and we are going to be taking a look at what the setup is for today's trade. And I want to go right to the phone and welcome our guest analyst, none other than Mr. Brian Hoops. Now, he is the president of Midwest Market Solutions. He is in Springfield, Missouri. All right, top of the morning to you there, Brian. Thanks for joining us. Talk about the setup for today's trade. I did not see any overnight export sales. We had a little bit yesterday for soybeans, no corn. Haven't heard of any corn for a little while here. So how bearish is that going to be today?
Well, good morning, Marlon. Yeah, overnight markets were down, and it will probably open that way this morning, despite the dollar trading a little bit weaker. The lack of export sales is concerning from the standpoint that our window for Chinese sales particularly is now through about late February, early March, when South American sales become available. So, that's our window of our best opportunity to make these sales, and that can be extended if we have South American weather issues like we had last year. But right now, they look to be off to a fairly decent start. So, yeah, it's a concern, I think, that the trade has in the back of their mind as we try and, discover where the prices need to be set at, because we have a weekly EIA report coming out today. That should be bullish, showing a large usage of corn for ethanol production. But then you have a supply and demand report coming out in just a couple of weeks in November, and it's likely to see an increase in yield of soybeans, possibly corn, but also crush has been slow for soybeans. And now when you factor in slower exports, USDA likely to raise yield. You're looking at larger ending stocks next month than what we saw in the month of October.
Well, let's look at our overnight trade here on the Globex session. On the corn market and our quotes provided by bar chart, we are weaker in the corn by 2 cents after 541.5. Now, this is after what we considered a fairly positive day yesterday, because the corn market hung on to gains while the other markets kind of fell out of bed late in the session. But now overnight, the corn went weaker again, so don't know how much that negates that. The soybean trade overnight down by 7.5 cents on November. We're at 12.30.5. January down 7 3/4 in the overnight trade. And then you get to the wheat, and in Chicago, we had December down 1.5 pennies at 7.50 3/4 last night. Kansas City wheat, December down 3 1/4 at 7.74. There was some moisture that moved through the plains last night. And in spring wheat, you had December down 4 at 10.17.5. Let's check out that cotton too while we're here. And in December, we were down 48 points overnight at 108.23. This wheat market, it had a big surge there for a while, but what do you read into what's going on with the wheat trade as it stands at this moment?
Yeah, we had a big move. Kansas City, Minneapolis all hit contract highs yesterday. We went through that Minneapolis contract to the $10 mark and just kind of blew through it. But we're probably due for some sort of a little correction or a retracement. After a surge in prices in here. The fundamentals haven't changed. It means we're likely to continue to try and ration this crop as we go through the winter months. But corrections are healthy and allows you to get into this market. If you sold some wheat because of tight basis levels, want to reown it, there's some opportunities, I think, coming here if you haven't been able to get involved in that market already.
Yeah, Egypt was tendering for some wheat yesterday, and it sounds like of all the bids they received, Russia would still be the cheapest. And that's after they raised their export taxes. So kind of a negative factor here. We probably missed out on another one. Well, we'll pause right here. And Brian, we'll take a look at our livestock setup for today when we come back. We're back with Brian Hoops, president of Market Solutions, Midwest Market Solutions in Springfield, Missouri. All right, Brian, I saw just a little bit of cash cattle activity in our livestock summary from yesterday, where we had some sales of cash cattle at 124 to 125 yesterday. Haven't seen 125, I don't believe, for a long time. Does that mean we would be maybe steady to firmer now compared to the last, well, forever, like 2 months?
Yeah, that's what got the trade so excited yesterday with the big sweeping $2 rally in the December contract. Was we broke out of that range of 124 trade to trade at higher money. And even though December's holding a large premium, it still was excited enough to see that big move higher. So it looks like the cash trade trying to firm up. Shoeless numbers are tightening last week, this week, and again expected next week to see a little bit tighter numbers compared to a year ago, and that has got the trade, trade's attention, trying to move higher and putting in a little bit of premium into some of the winter months as well as those spring and summer month contracts.
Well, it got my attention. Look at December yesterday, up $1.92, and it finished at 131.45. That was within about 15 or 20 cents of our high of the day yesterday. All the months were over $1 higher by quite a bit. On the feeder cattle trade yesterday, you had November up $1.30 at 159.77, even though the corn market hung on to gains, so that was mildly impressive. January and March were over $2 higher. And on the lean hog trade, you and I have talked before about this. Lean hogs, December was down $1.62 at 72.57, and it seems to be grasping at straws for support here, Brian.
Yeah, we're getting close, I think, to finding some technical support in the December hogs. The index has been down, I think, like 14 or 15 days in a row, but it's still $10 more expensive than where the futures are. That means that the cash market's around that $82 mark, but hog futures anticipating a drop of another $10. I suspect they're a little bit overdone. As we get into this support, we should find some sort of a interest in here in buying this market and aligning it up to the index. And so maybe we've seen some of the worst in the hog market. We may see some choppy price action, but hopefully this market will find some solid footing in here in the low 70 range.
Let's look at the dollar value, and on the dollar index here this morning, we're down 131 points on December futures at 93.810. Also on the Dow this morning, you have the December futures 48 points higher at 35,692. And on the West Texas Intermediate crude, whoa, we're down $1.50 this morning at 83.15 per barrel. That'll be interesting to watch too. Thanks, Brian, for the help. Brian Hoops of Midwest Market Solutions. Tammy, it's all yours.